Well, I think more than anything, UniCredit has been very disciplined in terms of expense management. They haven't taken any big risk. They've been very, very steady in their approach. There's been a very disciplined, steady approach to their business. And that's paying tremendous dividends now, quite literally. So I think that's more than anything else. It's been stable. They've been very careful to look at the operating expenses. They've managed that very, very well indeed. It's just a very well-run bank all round. And they haven't made any very big strategic moves in any direction. You talked about sort of M&A activity. They've been very reluctant about getting involved in any very big mergers and acquisitions and the distraction that that might cause to the bank's management. So I think it's been a sort of steady as she goes approach, and that's borne itself out really well for the bank.
What are the signals you're getting more broadly on net interest margins and how that is going to play out? I mean, I remember I spoke to Mr. Urchel just a couple of months ago, and he said that we were past peak net interest income. So looking ahead, again, it is surprising that they still managed to do so well on NII. But what is the landscape looking like for the rest of the European banking community?
I think in general, we're going to start to see NLI be squeezed more and more. So we're starting to see indications of that in certain countries already. I think amongst the French banks, we've seen net interest margins come down quite substantially for a variety of reasons. They're basically because the state regulates the interest that banks can pay on the savings accounts. And so French savers have got much larger interest rates more quickly than maybe in some other European countries. But basically, there's still a lot of deposits out there sitting in bank accounts, generating very little or no interest at all. And those depositors are going to be chasing higher returns and basically taking the money out of deposits and moving into higher bearing money market accounts or bonds or things of that sort that basically put pressure then on the costs of deposits for the banks. And so we're going to see that unfold, but it's been very, very slow. So it's been a bit of a surprise how reluctant or how willing these depositors have been to take on very, very poor and low interest rates on the deposits. So that's gradually changing, and that's going to put pressure on the banks overall throughout Europe and in the US as well.